Okay, in segregation of duties. So, of the librarians that were in here, how many of you are the only librarian that works in the library? Okay, that's quite a few. How many have one helper? One. Okay. And how many of you have more than a couple? Okay, so it's a handful from a few bigger libraries. So a lot of what I'm going to say maybe is for one or two people, and those that have more, you might actually be able to segregate your duties a little more. What we mean by that is if you have no segregation, you have one person collecting the cash, you take it to the bank, you put it on your books, you do everything. You reconcile your bank statement. In a perfect world, they like to see like 25 people doing all these different things. Well, I don't know anybody that has that kind of segregation. We don't audit too many firms or any kind of entities that can do it perfectly. However, you get up to a handful of people, you can do a lot with that. So this didn't come out too clear. So says that county employee A maintains cash balances per the books, and assistant cashier B maintains the custody of cash on hand, and then the treasurer down here makes monthly comparison reports. Any unreconcilable differences go to the treasurer to look at. So
Could you read that? Say that.
B maintains custody of cash on hand. Okay, so when one handles the cash, another person is recording in the general ledger. So you don't have the same person taking in the cash that does the recording. If, that's more what they'd like to see, doesn't mean it's going to happen. You have one person, then you have one person. So what your petty cash box looks like? Quite plausible. So we're going to talk a little bit about petty cash. One thing, you should have a set amount. If it's $50, then you should always be getting back to $50 at some point during the month. At the end of the month, maybe you get back to that $50. You limit who has access. So if one person works there, then that's the person that's going to have access. If you had several people working at your library, then one person should be taking care of the petty cash. Maybe you have a backup plan in case that person's gone or something. You should have a receipt with the petty cash for every amount spent, and it should be kept with the petty cash. So you had to go buy some stamps, and you got a receipt for that, and you put it in your box for your petty cash. Whether you do this as it happens or at the end of the month, you would then, on your books, you're going to record an expense for postage for however much you spent. Okay? So always, if you counted your cash and you counted your receipts, that should equal the $50 or whatever amount you decided on. And when you replenish, the check should equal the amount of your receipts in your box, and then you should be back to your $50. So always should be able to reconcile that at any point. And so if you have somebody to help you, if you don't have but one person working in your library, then hopefully you have a board member, a treasurer, somebody that is doing more oversight with some of your work. And occasionally, they should be looking at that petty cash. Okay, so cash and checks for deposit. You want to keep it safe from others, so how are you protecting that until it goes to the bank? Hopefully you have some kind of lock device. Sometimes it's just a file cabinet or a desk drawer. The better, more secure the better, but have to manage sometimes with what you have. So we want to make sure it all gets to the bank. Do we have a cash register that we're tracking what comes in? A cash receipts log? Written receipts? All those things can be used to match back to your deposits and make sure they equal each other and that all the cash got to the bank. Regular deposits. They should either be daily or weekly. You really shouldn't be waiting a month before you go to the bank. And we can talk about some of the reasons later, but one is just protecting it. If somebody did break in, the less you have sitting around, better.
And should the petty cash box and the cash register be separate items?
I believe so. Sometimes in you'll have a change amount too, but you're not paying for things out of that. So like if you always keep $50 change in a cash register, say, then at the end of the day, you would leave $50 in there. But if you have a petty cash fund that you're paying expenses out of, I believe that should be separate. Okay. Bank statements. So how can we involve a second person in this? So we would like to see someone other than the bookkeeper open the bank statement and review the items. And so by opening, it shouldn't even be open yet. Sometimes we see bank statements being mailed directly to a board member or something, or somebody can come in and look at it then. But the purpose for that is that if there was something illegal going on, then that doesn't give the bookkeeper a chance to change it before somebody else reviews it. So if it's not been opened yet. So that could be the director. If you had someone else, you have bookkeeper in addition to the director. Could be the treasurer or board chairperson or any board person. Look it over. Then when that review is complete, we like to see an initial and a date on there so we know that that has been done. Whenever we talk about internal controls, we like to see something that's verifiable as auditors. Because we can go in and they say, well, yeah, so-and-so looks at this every month. There's no indication that they looked at anything. So, we like to see some evidence here. So initial and date, and that way whoever looks at it knows that it's been done. And we started this presentation with the title, Protecting Your Library and Yourself. So when you get reviews done, and you get their initials on there that it's been reviewed, that's part of protecting yourself. Always having somebody look at your work. It doesn't mean that you didn't do anything wrong, and it doesn't mean that you still can't be accused, but the more somebody else is looking it over and signing off on it, the better it is for you. So what do you look at when you review a bank statement? So you're going to look at the deposits. You're gonna look at the date. How often are the deposits being made? If you had saw a long period of time between when the money came in, maybe you had some checks there that had dates on it so you could tell, oh, they received the money on this date, but they didn't go to the library for a month. Well, what about the cash? Was there cash on the deposit slip? And then also another item, sometimes we see deposits that have a total, less cash. Why did that happen? Who's taking cash out of the deposit, and is it going back to the library, or is somebody pocketing it? We don't like to see less cash on a deposit slip. And look to see that, the cash is being deposited and not just checks. I had an audit quite a few years ago now, but I was running short on revenue. It just didn't add up to prior years. There was not enough revenue being reported and getting to the bank. So I started looking at deposits, and there wasn't ever any cash there. So I talked to the bookkeepers. Oh no, we don't take cash. The only problem was, when I looked at their receipt book, which they did give out receipts, that there were many that were marked cash. It's like, something's not adding up here. So they were keeping the cash and just depositing the checks. Alright, so we're looking at checks now. Look when you're reviewing the bank statements, still on. So look at the payee. And back to reminding you, when we're talking about reviewing, this would be a separate person other than your librarian. So if we have a board member or somebody that's involved in this. So look at the payee. Do you know who this vendor is? Maybe look them up on the internet. If they don't come up anywhere, then you're going to need some more information about this payee. And for all your small libraries, you've seen probably all the names over and over and over. So if something strange pops up, check it out. Look at the amount. Does it seem reasonable for what they're paying for? And look at the signature on the check. Anything unusual? It might be you that signed it, so you probably should know your own signature, but whoever was supposed to sign it is that who signed it. Okay, and now we get into electronic transactions on your bank statements. There's a lot of that nowadays. Maybe not with your particular thing, but if you have withdrawals, whether it's with a debit card or you've authorized maybe the utility company to automatically make withdrawals from your account, and transfers to other accounts if you have a savings or something. Or maybe there's just a transfer and you don't have another account. That would be bad. Maybe they're transferring it to a personal account. So, it's kind of easy to overlook those electronic items. You just get to the checks and check those off. But look at those two. Make sure there's nothing unusual there.